So coming into 2024, either we get a financial crisis, rates go to zero, or we keep raising rates, but not as fast as governments are spending money because they're just trying to keep people doing things, and the rates are negative. That we get to crypto around 70,000 by the end of 2024, and that's a combination of the crypto halvening event, right? Maybe there's going to be a few ETFs launched by large asset managers in the U.S. and Europe and China, or maybe Hong Kong, to be specific. So we regain the all-time high by the end of 2024, and that's when the real fun starts.
BitMEX co-founder Arthur Hayes has given the most optimistic, audacious, and coherently delivered Bitcoin price prediction in 2023. Hayes, an American entrepreneur, banker, and former BitMEX chief executive officer, is predicting a 150% increase in the price of Bitcoin by the end of 2024. According to the renowned business executive and billionaire investor, the rise in Bitcoin's price will be supported by two important events: the 2024 halving cycle and the approval of spot Bitcoin exchange-traded funds in the United States and probably China. Both of these events will be so bullish for Bitcoin that Hayes, who has been reported as the youngest African-American crypto billionaire, believes the leading crypto asset is easily going to smash its current all-time high of $69,000. But this is only where the fun begins. Hayes is also predicting at least a 2,500% increase in Bitcoin's price in less than 5 years. According to the BitMEX co-founder, this massive bull market will sweep through every sector and industry, necessitating such high prices that will seem almost ridiculous. Hayes recently appeared on Tom Bilyeu's podcast, where he discussed his outlook for the United States economy both in the short and long term. Within the next 6 to 12 months, Hayes is anticipating a financial crisis that will force the Federal Reserve to backtrack and start cutting rates as quickly as possible. Hayes predicts that the U.S. Federal Reserve and other major central banks will soon resume printing uncontrollably in a very futile bid to get a handle on the world's massive debt load, but nothing will work and things will worsen until there's a complete global reset. Hayes also responds to the very small handful of people who continue to insist that the Fed will somehow be able to pull off a soft landing. He argues that with global debt at 360% of GDP, rates jacked up at such an unprecedented pace, and so much money printing, there is no way all of this simply goes away without serious consequences. We will now bring you clips from Hayes' discussion with Tom. Please ensure you watch the video to the very end so you don't miss any important information, including Hayes' $1 million price prediction by 2026. Also, ensure you smash the like button, subscribe to the channel if you are yet to do so, and turn on post notifications so you never miss any of our regular uploads. Thanks and enjoy the video.
I absolutely agree that there's going to be a major financial crisis, probably as bad or worse than the Great Depression sometime near the end of the decade. Before we get there, we're going to have, I think, the largest bull market in stocks, real estate, crypto, art, you name it, that we've ever seen since World War II. But at the end of the day, everybody's sort of believing this thing called, Keynesian economics, which basically is if something gets in trouble, the government should rush in, spend money. If they don't have the money, the central bank should print it. And, everybody collectively in the world, no matter if you're, what sort of ism you believe in, subscribe to this theory. And what that means is, we all have collectively agreed that the government is there essentially to attempt to remove the business cycle. Like there should never be bad things that happen to the economy. And if there are, we want the government to come in and essentially destroy the free market. So every time we've had a financial crisis over the last, 80 years, what happens? The government rushes in and they essentially destroy some part of the free market because they want to, save the system. And what does that mean? It's like whack-a-mole. So every time there's a disturbance, the central banks, like, the Federal Reserve in the US, they come in, they print money, they enact a bunch of regulations, and they basically say, okay, we don't want this sector to fail. We don't want, the creative destruction that is so-called, capitalism, if you actually believe in that. We don't want that. And every, 5-7 years, there's another sector of the economy that's essentially price fixed. And so we've gotten to this point where, globally, central banks have basically destroyed the free pricing mechanism in just about every single sector of the financial economy, except for one, which is the government bond markets, because they're so large, so unruly that it's practically impossible to essentially remove the market forces from this part of the market. But the problem is right now we're going to try. We've gone from 100% debt to GDP globally to about 360% as per the World Bank. And we are accelerating the amount of debt that we're adding onto the pile. Why? Because in the rich world, including China, Russia, and Brazil, we've stopped having enough kids. So the population is actually declining. So if you have all this debt and you don't have more humans being born to essentially do stuff to pay it back, the only way to ensure the system is solvent is for the governments and the central banks to start printing money. And now we've gotten to the situation where we have all this debt that needs to be rolled over. We have a population that has been told that, hey, you're good. Anything ever happens, we, the government, are going to come in and we're going to make sure that, you have enough food to eat, you got healthcare, we're going to protect you, blah, 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 right? And all that's expensive, especially as you have less and less humans who are doing productive stuff. And so we're just going to keep adding on debt because that's the only way the government can stay in business. And now we've gotten to the situation where there's so much debt and it's accelerating in an exponential fashion, that in order to save the market this time, right? So I think in the next 3 to 6 months, there's going to be some sort of major market disturbance, and probably in the US Treasury or other large global bond markets. And the solution is going to be, let's print the most money that we've ever printed to try to save essentially this fiat financial system that we've created since World War II, which is going to, in the first instance, create a massive bull market in anything, like stocks, crypto, real estate, things that have a fixed supply. Maybe they're productive, they have some earnings. And then after that, we're going to find out, actually, the government can't save everything. They can't just print as much money as they think to try to save themselves and fix the price of the yield of their bonds. And we're going to get a generational collapse. Massive top 2026 timeframe. And then some sort of Great Depression like situation happening towards the end of the decade.
According to Hayes, the only way we escape the impending collapse is if we innovate and develop another form of energy that makes us much more productive, or the global population doubles in a few years. Without those two options, Hayes is 100% certain we will continue to bulk under the massive load of our piling debts and all the future growth we've brought forward. As long as governments continue to choose to print their way out of economic and financial situations, then it's only a matter of time before people really realize that there is too much money chasing a very limited number of goods, which means the prices of these goods and assets will continue to skyrocket rapidly. Hayes gives the example of Zimbabwe, which he says would have been the richest country in the world if money printing worked. On the possibility of the Fed somehow managing a soft landing, raising rates just enough to bring down inflation without breaking the economy, Hayes describes that as an unattainable goal. Hayes believes all the talk about a soft landing is to keep the public calm, so investors don't sell their stocks and bonds and keep throwing money into the failing economy. But with a 360% debt to GDP ratio, the highest money printing in human history, and unprecedented rate hikes, Hayes believes a soft landing is completely in the rearview mirror. This is why the BitMEX co-founder is urging everyone to exit the fiat debt-based system and look into more revolutionary options like Bitcoin and other cryptocurrencies. Here are more clips from the discussion, including with Hayes' $1 million Bitcoin prediction.
Financial system that's gone from zero, right? First Genesis block in 2009, to a system that has weathered multiple crises, right? In the most recent, we had one of the largest exchanges in the world, a bunch of the largest lenders, some of the largest hedge funds, massive amounts of fraud. All this happened in the span of 6 months. People lost hundreds of billions of dollars of value, yet blocks kept being produced every 10 minutes for Bitcoin, 10 seconds for Ethereum, and whatever the block times are for a lot of other currencies. The decentralized finance or DeFi movement, people were still trading on decentralized exchanges. People were still borrowing and lending different currencies on some of these lending platforms. The financial architecture worked, even though we had one of the biggest losses of wealth and biggest amounts of financial malfeasance ever in the crypto ecosystem. And I mean, if you want to compare the amount of money that Sam Bankman-Fried and his crew allegedly stole from their customers, it would rank as one of the largest thefts, financial frauds in human history, right? All this happened. There was no bailout. There was no central bank that said, we need to preserve the system. And therefore, if assuming they could, print a bunch of Bitcoin or Ethereum or whatever, and make sure these entities are made whole so that certain people don't lose any money. None of that happened. People lost a lot of money, but the architecture of the system worked. The community was still there. People are still shipping code. I was just at Token 24/9 in Singapore. The energy, 11,000 tickets sold out. Basically almost took over the whole of Marina Bay Sands Convention Center for this conference. People around the world believe in this system. There's some of the smartest people in the world who I've ever met who are building this system. You take a look at who are the smart people in the scalaric financial fiat system. A bunch of fucking Muppets, right? They're there because they've always been there. Not because they're special, not because they're inspiring. So they're not building anything new. They're trying to keep the old thing relevant. And so that's why I believe this is going to have staying power, because the math works, the cryptography works, but most importantly, the people are so impressive and so dedicated and so enthusiastic about what they're building. So my working model is that we're going to continue chopping around 25, 20, 30,000 this year as we get to some sort of financial disturbance and people recognize that real rates are negative. If government are growing, if the economy is growing at a nominal rate of 10%, but I'm only getting 5%, 6%, even though it's high, people are on the margin going to start buying other stuff, crypto being one of those things. So coming into 2024, either we get a financial crisis, rates go to zero, or we keep raising rates, but not as fast as governments are spending money because they're just trying to keep people doing things, and the rates are negative. That we get to crypto around 70,000 by the end of 2024, and that's a combination of the crypto halvening event, right? Maybe there's going to be a few ETFs launched by large asset managers in the U.S. and Europe and China, or maybe Hong Kong, to be specific. So we regain the all-time high by the end of 2024, and that's when the real fun starts, right? That's when the real bull market starts. And so my mental model for where we could go, I think we're going to go somewhere between $750,000 to $1 million in Bitcoin on the upside. So my upside target-ish is sort of the $750,000 $1 million level, 2026 timeframe, just because, again, I believe this is going to be the largest market in bull market in financial assets we have ever seen in human history. So not only will Bitcoin be at a ridiculous price, NASDAQ will be at a ridiculous price. S&P will be at a ridiculous price.
Arthur Hayes is predicting a 2,500 to 3,400% explosion in Bitcoin's price by 2026, which will be preceded by the most massive money printing campaign in human history. Hayes believes central banks will start printing in 2025 when the first bout of the impending global crisis hits. The excessive money printing will cause the biggest bull market we've ever seen, which will only make the second phase of the crisis, a 1930s-style Great Depression, all the more depressing. Before then, he is predicting a massive boom, especially for cryptocurrencies like Bitcoin and Ether and AI and tech stocks. What are your thoughts on Hayes' predictions for Bitcoin and his outlook for the US and global economy? Do you agree that Bitcoin will smash its current all-time highs in 2024 and climb over $750,000 per coin by 2026? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.